Folks, one stock is setting up to break down big. While the stock market continues to outperform its typical annual returns, there are some signs that stocks may be going through some rough rotations or some sector rotations, or maybe a rough patch in the near term. First, we have inflationary pressure, which sooner or later is going to make a big margin bite out of most companies. And second, in September, Morgan Stanley strategist led by Michael Wilson said that while it's still the worst case scenario, evidence points to weaker growth and falling consumer confidence that may result in a drop of more than 20% in US stocks. While I believe the 20% drop is going to be potentially limited to specific sectors such as consumer discretionary and tech, and I don't believe this drop will be sustainable, but we can't continue to believe that the stock market is going to give us double-digit returns every year, especially if the Fed is going to continue taking their foot off the gas pedal of the money they're putting into the bond market monthly. So today, I have a stock that I believe will go down regardless of where the overall market turns. But if consumer discretionary stocks do experience a 20% sell-off, which is not really all that big considering large caps have fluctuated this year much more than usual, but say we do have a 20% sell-off, these stocks should sell off rather quickly, in my opinion, or at least this one should. The stock is Dish, D-I-S-H. Now, this is a subscription service TV pay programming technology with most choices at its best value. So if you want to watch HBO or Showtime and have a little dish glued to your roof, you guys know what Dish is. The stock is down more than 8% this year, while the market is rocking and rolling, and down over 40% over the last 5 years. Earnings per share growth versus previous quarter, negative 17%, close to 17%. Earnings estimates are down last 2 quarters, and I'm seeing more downside ahead. And here's my question to you. Does anyone still expect you to put a plastic dish on your roof instead of just streaming all your favorite movies over the internet? The tech behind this business model is vanishing. And even DirecTV, the leader, is offering a streaming model at this time. Technically, the stock has been moving lower for over 5 years since making all-time highs in 2015. And I'm seeing more downside over the next quarter. There's no major support till the $25 level, and I believe we're going to see the stock begin making its way down there shortly. I have a 6-month profit target of about $22 per share, but I think over the next 12 weeks, we're going to hit a level of about between $28 and $25 if we can get past the current support level. I hope it helps. And I got to say, this Dish stock, it's in the wrong place at the wrong time. Hope that helps. Folks, after witnessing gains like 36.92% on APTV in 7 days, 53.66% on Power, PWR in 4 days, and what about 83.87% on Albemarle in 6 days? I finally am pulling back the curtain on my most critical stock market strategy yet. You see, inflation, it's running amok. And Wall Street knows that the best way to beat it is by flooding specific stocks set to outperform. But I found a way for us to get in on them before Wall Street does. And I'm ready to rush everyday traders to the exact ticker that was just triggered by my breakthrough strategy. Click on the link below to learn how to take advantage of these massive trades. And make sure to like this video, subscribe to this channel if you're watching on YouTube. Stay ahead of the market. Be the first to be notified when we post our next video.